Hey traders, what's going on? Jamie Saettele here. Happy 2022. And I am going to work out this screen sharing thing. It's been a couple weeks since I've done this, so I might be a little rusty. And I wanted to remember to share the screen because a lot of times when I haven't done it in a while, I forget. All right, so again, Jamie Saettele here with Scandinavian Capital Markets as well as SB Trade Desk. And again, happy 2022. And we're going to dive into our charts here early in the year. The most important time of the year from a trading perspective, in my opinion. There's reasons for that, objective reasons for that. And we're going to dive right into why that is right off the bat. So there is a tendency, and I've written about this for years. I mean, when I was at DailyFX with FXCM back like over 10 years ago, I think I wrote an article. It might have even been, in the 2007 or 8 or something. I wrote an article about the tendency for euro dollar to make a high or a low for the year. In other words, make a price extreme in January. Okay, and actually that is fractal. It tends to also happen during months. So like not as significant, but there is also a tendency for euro to make a higher low early in the month, right? So add that up. Here we are at the beginning of the year, and it makes it, kind of ripe, if you will, for us to potentially make a big important pivot, right? So again, this is our DXY chart. So we're kind of laying down the background for, again, why we might have, a dollar drop in the cards coming up here. We all are familiar with this. We've been looking at this chart off and on for months. But let's go to our euro chart, right? Okay, so here's that euro chart. And again, this is going back to the 2014 high. And we have trend lines drawn off of various highs back in 2018. And you can see here the support, right, in 2020. The bottom one here was support. Okay, and again, we also have that 618 retrace from 2017 up to 2018, which is 1186.5. It's the exact level that we made low in November. And since then, we've gone essentially nowhere. However, is this a little base before we rip, or is this a little sideways consolidation before we dump? Well, given everything I've said, I lean towards the former, and that is I'm looking higher or thinking higher in euro. Again, this is for those of you that read the stuff. This is my trigger line, so to speak. You can see all the beautiful little lows that it crosses, and it was resistance in November and December. And so far this year, it's been support each day this year, 3rd, 4th, and 5th. So really, there's not any room for error, if you're going to go higher, okay? I mean, really, your breakout level, call it as 1380 or so, pretty clear level there, right? Boom, get above there, and then off to the races you go. And, your regular chart levels, right, would be you're looking up at like 115, 50 or so, and then the 117 level. But, who knows what kind of calendar here the FX market is on. You could go nowhere fast. So we'll see. Like last year, for example, right? We had the high was on January 6th, right? First week of the year. If you remember, the psychology then was pretty much the exact opposite. It was probably a little more extreme, actually, where, the dollar was going to die, and that was a pretty big consensus trade. And I was pretty vocal about being a euro bear, dollar bull at that point. And then here we are a year later, and it's pretty much the exact opposite. I wouldn't say that dollar higher is necessarily consensus, but if you go to Google and type in US dollar, and you get, you'll get a lot of forecasts for 2022 calling for, a lower euro and a higher dollar. So I haven't really gone through all of the, usually you can find something good on Bloomberg about like, all the forecasts from all the banks and stuff, and big shops. So I have not gone through that quite yet. But from a technical perspective and a timing perspective, can make a good case for a higher euro here. Also, we're going to look at some stuff. It's a bit different. Okay, so again, this is work that goes back many years. I wrote an article, again, I think this might have been for like either SFO magazine, which I don't even know if that exists anymore, or maybe it was Technical Analysis, Stocks and Commodities. I don't know. It was a long time ago, but obviously still have all of my, indicators and setups and stuff like that programmed in. And the red and blue dots that you see on this chart, if you can see them, okay, are what those mean. That's a dot that's placed when you have this is a monthly chart, okay? When you have an inside month and the bar prior tags the upper or lower Bollinger Band, right? 2 standard deviations from the mean, okay? So I call it the inside BB, all right? The logic behind it's pretty simple, right? So in a trend, market's going in one direction. If you get an inside month, right? I mean, I guess you could run this on any time frame, but a month, you're going to get, first of all, you're going to get false signals anyway, but you're going to get a lot of false signals if you run it on anything shorter, I would think, than on a month. But if you get an inside month, then by definition, you did not make a lower low or a higher high. So by definition, the trend is paused at least. Well, if it's paused before a trend can reverse, it has to pause, right? So that's why it's a warning sign. All right, so let's look at this. So last month, this is DXY. Okay, last month, that's why we have a red dot here. We had a inside month, and we were tagging the upper Bollinger Band. I'll throw up a Bollinger Band here for you. Hold on here. There you go. All right, so you can see it. Tagged the month prior, inside month. So just a warning signal, if you want to call it that. Again, now we had a false signal back in October of last year, right? That would have been a bullish one. It would not have worked out. You got 0 follow through on that, by the way. He's straight down. We did get a warning sign for a top, though, back in April, right after the crazy March move. Top back here. You can see you've gotten some really big, some really big signals here in terms of highs and lows. If we look at euro itself, you can see we got the inside BB obviously here, blue. Last one's back here. Again in April 2020, after the whole COVID psycho March 2020 month. You can see for yourself. I mean, you've got a bunch of pretty decent warnings at lows or near lows or before the market takes off to the upside. I had one back here in November of 2000, which was the month after the all-time low for euro dollar, not Deutsche Mark or anything like that, but since inception of the euro. Okay, so thought that you'd find that interesting. We can also look at this, as you know, I like to look at the currency ETFs for as signals. Again, I don't trade them. They're terrible trading vehicles. They're completely inefficient in terms of the use of capital. But again, I look at them for analysis purposes, notably for volume. But it's interesting to note too that you had the inside BB here for FXE, and the signals here have been really good. Okay, So that is, call it kind of giving me a little more oomph or confidence in potentially trading a bigger dollar turn early in the year. Okay, I'm going to bring in, let's bring in, so here's another little method if you want to call it that. All right, we're going to look at, let's go to Euro again. All right, now, all right, these lines that you see on the chart, okay? These horizontal lines. These are what I call square root levels, okay? So I got this idea when I was reading something about, I think it was Sir John Templeton, who you can, if you have no idea who that is, you can look it up. But he had a quote, something along the lines of the markets move in the square root of price or something like that. I don't know the exact quote, but I don't know. It made me think like to just at the beginning of each year to just square the price, okay? And then you add that and subtract that in increments to that square root to the price. So, you have 1 square root or 2 square roots up or 3 square roots up or 4 square and so on and so forth, right? So for example, if we square the opening price for Euro, which is 113.73, okay, then we're going to get 106.64. So let's just call that 107 pips. So each 107 pip move is a square, okay? Now, again, expanding on the logic of highs and lows at the beginning of a year, especially, if sentiment is there, if the chart is there, there's a level there, you've had signals, all that stuff, right? You've got to have that stuff first. It's not a standalone deal here. It makes sense to look at that square root level for a high or a low. Now, remember last year on January 6th, the Euro topped, right, on January 6th at well, let's see, what was the exact high? Exact high was 123.27, okay? The high day close, we closed at 123.27, okay? That was just about the exact square root level, okay? The square root level, the first square root up last year was 123.32. That was the high for the whole year, okay? Now follow with me because we're gonna bring this to present day, and not actually with Euro. I remember it also happened back in 2019. Everyone came in super bulled up on Euro. We went bonkers like the first week, okay, and ripped face, and then we topped at the first square root level to the tick, actually. So what we're going to do is we're going to bring this, we're going to look at Japanese yen, we're going to apply the same idea, all right? But before we do that, we're going to look at some yen charts, okay? All right, let's look at some yen charts. Why don't we start just with a good old price chart here. Let's go, I think it was this one. No, it wasn't. Where was it? Where did I type these in? Maybe it didn't save. Oh well. Not a big deal. We'll just do it right here so you can see it for yourself. All right, so one, we can make an argument from just a simple Elliott standpoint. Well, first, just look at the damn chart, right? So like look across the chart, like where we are right now. Okay. You see all this over here? That's a lot of stuff to deal with. Okay. Now I will add here as well, like if you don't, there's a caveat here. Okay, so I'm going to go to a weekly chart. Okay, you see this big, thick, beautiful magenta line here? It's drawn off the highs from 1990 and 1998. Extends to the left, it nails the 78 low. That was also resistance, by the way, in 2015, which was an awesome trade. That line is higher. Okay, it's like mid 117s at this point. Yesterday we traded 116.35, so we were actually at one point like 100 pips basically from hitting that level. So my point here is that, you know, if we go to new highs like yesterday's high, then that's probably where you go. And I wouldn't want to screw around with anything yen until then. But it's really like, for all intents and purposes, we're pretty close to that level. So, yeah. Oh, here it is. Okay, so it did save. All right. So what we do have here is we also have an Elliott. We have an Elliott count from the low last year, which, oh, by the way, the low for dollar yen last year was, guess what, on January 5th, 1 year ago to the day, right? Today's January 5th. So there's an Elliott count that can be presented here. Okay, wave A up, wave B down, and then wave C 1, 2, 3 with little 3 of C here and 3 as well. 1, 2, 3, 4, 5, 4, 5. Now what I've got here is a extension. This is important. This is an extension on log scale. If it's not on log scale, it's going to be a little different. 115.84 is 2 legs up. If it's on log scale, 2 legs up is 116.24. Okay, we closed yesterday at 116.15, pretty close. Now let's bring in a COT chart. This is yen futures. Okay, yen futures are quoted the opposite or inverse is spot, so it's yen dollar, not dollar yen. It's important to note. At big turns, okay, and this is something that is no secret to anybody, but I expand on it in my my book that was written in 2007, in Sentiment in the Forex Market. But you can see that the big money, the big specs, right? They're hedgers, okay? Or I shouldn't say specs, the big hedgers, right? They are not trend followers. They are quite the opposite, actually. And they tend to be right at the turn, right? In other words, they will hold their biggest long position at or near price lows. That's the blue line. And they will hold their biggest short position at or near price highs. Okay. Well, last year in January, they held a big short position. That was the high. Okay. Right now, it is the exact opposite. They recently were very long. In fact, the biggest long position they'd had since October 2018, which lo and behold was a price low in yen. That would mean price high in dollar yen. Okay. And now they've backed off a bit, but I would expect that after the recent move we've had over recent weeks, you'll probably see this tick back up a bit once we get COT data, which, you know, is kind of annoying that it's released with a 3-day lag because it's released on Fridays. It's as of that Tuesday, the data. But yeah, you can see the psychological profile or positioning profile, if you will, is pretty much the exact opposite as it was 1 year ago. So again, we can make a case here for the market to reverse based on everything I just said. All right, so we open the year at 115.10. Let's square that. You square 115.10, you get like 107. Therefore, add 107 pips to 115.10, and you get 116.17. First square root up. I'm wondering if we saw the high for 2022 in dollar yen yesterday, right? Sounds ridiculous to say something like that. I know, you know, it's just some asinine proclamation, but based on, you know, everything that we've looked at, it's not that stupid and that crazy. Anyway, we also had pretty good volume yesterday in yen futures. It was like 1.5 times the 20-day average of volume, which tends to you know, in the kind of the position or profile that we have with the COT and everything else, and the chart pattern and everything I mentioned, you know, might be capitulation. So if we have an update today, which so far we do, and again, update in yen, and if we get a little more volume today, we actually could have a decent signal for dollar yen. Okay, so that will all be talked about later, and trades will be put forth for SB members when and if appropriate. So there's dollar yen. Okay, that's my thoughts on dollar yen with the beginning of year logic, and we've seen this happen in yen before. Right? I talked about earlier 2015. Well, remember 2017, the open of 2017. So this was the Trump election here, and we went bonkers for a while, and then we ended up topping at the first square root level on the first trading day of the year, actually in 2017. So, you know, this is not, again, not a standalone strategy by any means. Like last year, we reversed in the on 1.6. We did not even make it to the first square root level, but it was pretty much the opposite in terms of positioning and everything else. All right. What about that fancy schmancy inside Bollinger Band monthly thing? Here's dollar yen with that. You can see haven't had this success recently with this as you had with euro, although throughout history you've had some pretty big signals or alerts, if you will, including 1995 low, high up here in 98, low back here in 2011, low here in 2016. We just got one here. Again, we've had a pretty crappy performance with this alert, signal, whatever, for a while. FXY actually did not even get one. I guess the Bollinger Band was not tagged at that point. All right. So, okay, here we are. Where was I? I've gone through so many things here they usually don't that I've confused myself. Okay. All right, so we did all that. All right, now let's just go to our regular scheduled programming and check out things like dollar or pound dollar, I should say. Okay, so cable, do you remember? I know we talked about this. We nailed the lows back here in cable at 132-ish because, well, we had great chart support. We had VWAP from the March 2020 low, and we are now actually approaching resistance. So resistance would be defined here by VWAP from the high, which was the May high, channel, which has been just a beauty, I should add. I'm not going to get rid of that shit. It's been a beauty, right? Nailed the lows, ripped off of that. It's always kind of tricky end of December, right? There's so much going on, especially if you have a family. And it's hard to catch those trades. You don't want to be looking at the markets. But in any case, being, you know, kind of holding this dollar bearish bias position, if you will, you know, I would be willing to actually go against that and trade cable to the short side, just for, you know, again, just to trade here, as they say, just to trade, not a lifestyle change. If we were to trade up into this 36 give or take level, and, you know, reverse off of it. But if you don't, right, if we break through this, then you're going to have, you know, targets up near 141. So that would be a pretty hefty breakout. Anyway, point is just pay attention to this. I was hoping for a pullback early in the year to get long near 133.70. Excuse me. More coffee needed. That did not happen. So right now, focus is on 36. Maybe a little scalp off of that for the short side, but we'll see. Okay, let's go to Aussie. I love Aussie higher. We've talked about this. Again, chart-wise, hitting that November 2020 low. I get it. It looks like a big head and shoulders. Apparently, so did everyone else on Twitter because I saw a lot of people talking about it. And then we traded down here, and guess what? We have, rallied like 3 or 4% from the low. So here's another thing with sentiment on. So Aussie positioning. Check out the COT on Aussie. I think they just had a record net long position. The speculators did. That blue line. Again, you want to be long when they're really, really long, right? When they're really, really short, you probably want to go with them too on the short side. So yeah, they were really long. In fact, the longest since at least, again, it may have been, I'm not sure, it may have been a record. I can't really tell. But since back here in March 2015, you did get a little rip. Then we reversed. But then the ultimate low is not made back until November 2015. But again, this was September 2021, and here we are now in January 2022. So there's a lag there. In any case, it's, like to go with those specs on that side, okay? And just very, very short term, the near term chart construction is, it's promising. I mean, you've kind of got this little series of higher highs, higher lows. They call it an uptrend. Nice little channel, all that stuff. So, trade within the channel. Next level in the upside price, 73.70, something like that. If you break above it, then you've got kind of a running bull that could really take off. On that, let's look at Kiwi. This was a short-term wave count that I presented several days ago. And we were looking for a C wave low. We got it. I suppose that you could still have something complex and come back lower, because I was actually thinking support would be a bit lower, like 67.30s, but whatever. So, not or withstanding that wave count and all that stuff, I would be looking at a breakout above, let's call it a bit above 68.60 with this upward sloping neckline of sorts. Okay. Dollar CAD. This is one that we have liked the short side for coming into this year. And if you read the updates, you'll know why. We've had just huge, resistance from this parallel, which we slammed into, reversed. And oh, by the way, reversed from December 2019 low. Okay. Guess what? That was also an important level back in November 2020, December 2020, August of 2021, and it just was again in December. Near-term chart, kind of a rock and a hard place. We did bounce off of this set median line from this fork. That was the last trading day of the year. From here, I was thinking we're going to get a move up into 28.30, give or take. I would still welcome something like that to really put on something big with a relatively tight risk point. But we're kind of running out of time, as you can see. So if it doesn't happen really over the next day or so, we'll see. Again, you do have FOMC minutes coming out today. I don't know if that's going to be a big mover or not, obviously, but maybe you can get some fireworks on that. But yeah, I do like dollar CAD on the short side. This would be, again, resistance. If not, though, your next level for support is going to be probably down near the 200-day average, which for dollar CAD is 125. Okay. Okay. Oh. And what else should we look at? Gone through our majors here. Could look at some commodity stuff. Gold. Fairly constructive on gold. You know, 1834 is a big spot. I don't see much of a trade here. There's really nothing. I don't like buying into this level. So I'm not really going to comment too much on gold here, but 1830, really things start to get interesting above 1850. At that point, then maybe you can trade some momentum up till 1915 or so. Silver is interesting. Again, we had the channel down from the Feb 2021 high, right? Hit those lows. We have held up, got a possible little double bottom action here with that September and December lows. And it's really just a big level. I mean, look at this. This is the July or 2016 high, I should add. You know, there's a lot going on here. I mean, there's a lot of support, a lot of former resistance, big picture stuff that's been acting as support. You know, all of this essentially since August 2020 could be a range that gives way to another leg up within right here, right? Big move up from, you know, an 11 handle up to a 30 handle, and then trading sideways for, you know, where we go on a 1.5 years here, basically, something like that. And eventually, you know, this might be a half, you know, halfway point for a much bigger move higher. So, you know, continue to focus on this channel as far as laying out levels. If we were to pull back, you know, I would look at 2209 as support. I don't think we're actually going to pull back that far. You can see that VWAP from the low is actually holding up as support on the dips over the last, say, 2 to 3 weeks. So we're at the center line of that channel now. If you can get up through it, it might provide support on pullbacks. So I don't know. I'm constructive silver. Near term, obviously, you're just looking up to this high, which is going to be 25.40. So, and the channel, right? The big signal probably comes on a break above this channel, whenever that may be, if that happens. So we'll see. Copper, kind of struggling at a level that we thought we would. 447. So the 50% retrace and the high from over here. Don't have anything to really talk about when it comes to copper right now. Crude is actually breaking above a pretty decent level as we sit here and speak right now. That was the 2 legs up from the low here. So and the high from over here in July of 2021, and we are breaking up through that. So this expanding wedge formation is very much intact, and as long as we're within it, I think you kind of have to respect higher levels. Prior to today, it was a bit different, my thought process, because again, we had been failing at this level for about a week, and we've broken through there today. So let's see how we finish the day, but as of now, have to kind of maintain a positive or constructive bias, if you will, on crude. All right. Okay, so that's it for me today. Again, I hope you enjoyed our first FX Power Hour of 2022, and we'll be back, of course, next week. Again, Jamie Saettele here with Scandinavian Capital Markets and SB Trade Desk, signing off, and Happy New Year for the last time here, and good luck. Take care. All right, bye.